Hello, everyone, and welcome to today's webinar. My name is Anna, and I'm with the New Mexico Small Business Development Center. Today, we have Peggy McDonough joining us, who is a certified SCORE mentor with 30 years of project management and finance experience. Peggy will be presenting Are You Tax Ready? PPP, EIDL, and ERTC Implications. We will be using the Q&A function to take questions and welcome attendee participation, so don't hesitate to ask us any questions you may have. We'll answer questions at the end of the webinar. If you have any technical issues, I can address those within the chat feature for you. Thanks so much for joining us. And without further ado, I'll hand it over to you, Peggy.
Thank you. Anna's going to be nice enough to be working the presentation for me. So thank you very much, Anna. And as she said, I am a SCORE certified mentor. And SCORE and New Mexico Small Business Development Center, we work in collaboration to provide small business owners with professional training and support. So today's webinar is an example of this collaboration, and we hope you'll find your time today productively spent and useful for your business.
Just let me know when to advance. Sorry about that. Thanks, Peggy.
That's okay, I will. All right. So just a little bit of administrative guidance I want to get out of the way. As we said, do not use the chat function during the webinar because we don't monitor the chat. Write your questions and the slide number, if you can, in the question and answer feature in Zoom. And we will address all of your questions at the conclusion of this presentation. Next slide, please. So SBDC is prohibited from giving tax or legal advice. So any tax-related questions, accounting questions, or specific questions about your company's situation can only be answered with credible authority by your accountant or your attorney. So please keep in mind the information we're covering today is changing rapidly. In fact, I was just out on the internet last night with some updates, and it's based on current understanding of the programs. It can and likely and does change. And although we will be monitoring it and updating this webinar as new information does become available, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. Next slide, please. So what are our objectives or our expectations for today? So what I would like you to do is I want you to walk away from this webinar with a better understanding of the tax impacts for various COVID relief programs that have been signed into law by Congress in the last year and 9 months or so. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, and that was signed into law in March of last year. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. So I want you to leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professionals in order that you can make the best decisions for your business. Next slide, please. So we're going to be focused on 3 specific programs. There's the Payroll Protection Program, or commonly called PPP, the Economic Injury and Disaster Loan Grants, or EIDL, and also the Employee Retention Tax Credit, sometimes called ERTC or just ERT. We'll be reviewing the timeline and the background of all of these programs. We'll talk about the tax implications, and we'll also answer or show you some of the frequently asked questions. And again, we'll end today's webinar by addressing any questions that you may have. Next slide, okay? So on March 6th of 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Now that act declared the coronavirus or COVID-19 outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to use its lending authority to make economic injury disaster loans, or EIDLs, for small businesses impacted by the pandemic. Next slide, please. And later in March, just a couple of weeks later, we had the CARES Act, and the long terminology for that is the Coronavirus Aid, Relief, and Economic Security Act, and it was signed into law. It created the Payroll Protection Program, and it provided nearly $349 billion for PPP loans. In early May, Congress provided an additional $320 billion in funding. It also introduced the grant to the EIDL, the SBA EIDL applicants, so they could get advances on their EID loans. Now, these advances were treated as tax-free grants, and they didn't need to be paid back. But those funds were exhausted in July of 2020. The third thing it did is it created the Employee Retention Tax Credit. Now, the ERTC is a fully refundable tax credit for employers. It's equal to a percentage of qualified wages, including your health plan expenses, that eligible employers pay to their employees. Next slide, please. All right. December 28th, 2020, we had the Consolidated Appropriations Act, or sometimes called CAA, and it was signed into law. And embedded in that act was additional funding of $900 billion in COVID relief, $300 billion in aid for small businesses, $284 billion to SBA for first and second PPP forgivable small business loans, and another $20 billion for EIDL grants to businesses that were in low-income communities. And you can see as these things progressed that they became more and more targeted, because the first time Congress provided money, those big businesses jumped in and grabbed everything. So Congress went back out, got some more money out, and made it more targeted, so smaller business had a chance to at least get some of this funding. In March 11th of this year, we had the American Rescue Plan Act of 2020, and that was $1.9 trillion. It was voted on in March 10th, and it was signed by President Biden on the 11th. Among other things, again, it provided small business assistance, including specific programs for restaurants and live venues. In March of the year, President Biden signed an extension law that extended the application deadline. And last but not least, and I have this in red because this is brand new stuff and it's happening every day and something changes, we have the infrastructure bill. And the infrastructure bill has impacted some of these programs. And although it's passed by Congress on last Friday, it is anticipated that President Biden will sign it into law next week, possibly even Monday. So I want to bring this up to you because there is implications on all of these programs, and I'll go over those as we go through the programs. Next slide, please. So what happens when we have this kind of environment with all this money coming out of Congress, with different acts and laws and voting going on? Well, it's an interpretation, because exactly what does Congress mean when they sign into an act and bill into act? They sign a bill and the president signs it. What does it mean? What did Congress really mean? So it impacts a bunch of organizations. It impacts the IRS, the SBA, banks, CPAs, as well as business owners. So you have to wait for the Treasury and the IRS to give us what the new tax laws are and any guidance. And those usually lag, and they're confusing. And in some instances, they're even contradictory. And even though some of these bills were passed last year, there's still contradictory information that's going out there. And that's why it's important that you work with your CPA or your lawyer or your payroll professional to help you through this quagmire. We have new forms. We have new applications. We have confusing interpretation in a constantly and changing environment. And this means you're going to have to deal with business situations and tax implications that you've never seen before. So let's go first into the Payroll Protection Program. Now, the Payroll Protection Program is one that has been impacted. And because of the size of this infrastructure bill, Congress was looking for sweeping up any funding that it could possibly find. And the PPP funding has now been rescinded. Now, although our applications for PPP closed back in March, there was a lot of fraudulent money that was captured and that was put back into the PPP loan program, as well as people started paying money back. So that also went back into the program. So there was some hope that this money that was captured from fraudulence and also people paying back would go out into another distribution to small businesses. But unfortunately, that has gone away and is definitely rescinded. So what's the purpose of it? The PPP is 8 to 24 week period. There is a first draw that was part of the CARES Act, and PPP loans could be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs that are related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. That particular one, that first draw, that money was scooped up by large businesses very quickly and leaving small businesses unable to apply. So then there was a second draw where you could get some more money. Again, that came with the Consolidated Appropriations Act in December of last year. And that allows certain eligible borrowers that previously received a PPP loan to apply for a second draw, and with the same general loan terms as their first PPP loan. Again, this application period ended in May of this year. So we're now into the forgiveness portion of this program. So what is the loan forgiveness? Now, a borrower can apply for forgiveness once all loan proceeds for which the borrower is requesting forgiveness have been used. And borrowers can apply for forgiveness anytime up to the maturity date of the loan. So if borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and borrowers need to begin making loan payments to their PPP loan lender. Now, in order to apply for forgiveness, work with your PPP lender. But I also want to tell you about a new option that just came out probably about a month or so ago. The loan program was finding that it was getting clogged up, and they weren't getting things done and money and forgiving small businesses that were applying for money. It was taking weeks and weeks and weeks. It was an administrative burden. And particularly if you got your money through a small local bank, they just don't have the staff, they don't have the structure to really handle all of this administrative work. So it was a direct forgiveness portal was developed. It's a great tool. And what it does is it allows for the small businesses to work through this portal. And if you have a loan that's, let's say, under $150,000, you can go into this portal and you can apply for forgiveness, and you can get your money, your forgiveness done much more quickly. It happens within weeks rather than within months. Now, the caveat to this is if you went through a Citibank or a Wells Fargo or one of the larger institutions, they have their own portals. So you would have to work through them through their own portal. And in order also for a lending organization to use this portal, they have to apply. But at this point, they have quite a large amount of small banks that have applied for this, that are using this portal, and in the last month or so, they've approved over 1 million applications for forgiveness. So it's a great tool that you can use. Now, SBA offers free counseling and training events to help you with the Paycheck Protection Program, and you can get at this portal at the sba.gov website. So if this applies to you, I would highly recommend that you use this and see if your lending institution is using this forgiveness portal. Next slide, please. All right, what are some of the tax implications? Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money that you receive. The loan is to provide businesses with the money to keep running and continue paying their employees. It was never meant to be a tax burden for businesses that receive these funds. Now, with the passing of the Consolidated Appropriations Act, there was more clarity on how the expenses covered by a PPP will be treated. So previously, anything you spent your PPP loan was not going to be a tax deduction. Now, these expenses are tax deductible. So simply put, Your PPP loan will not affect your tax filing process. So historically, if you have a business loan and it is forgiven, that automatically is considered taxable income. It's been that way in the Internal Revenue Code for forever. But however, the PPP program breaks that code. Congress specified, and the IRS has clarified, that forgiven PPP loans will not count as income. And this applies whether your entire loan is forgiven or just a portion. This loan, again, is to provide businesses with money to keep running and continue to pay their employees. And again, to repeat, simply put, your PPP loan will not affect your tax filing process. So, though Congress has walked back the IRS's stance on PPP and its relationship to deductible income, that doesn't necessarily mean that you can leave these funds out of the conversations on your 2020 if you're filing retroactively, or your 2021 taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you should still be very careful when it comes to taxes. There are still a lot of unanswered questions. And some of these questions stem from confusion in the PPP application process. In some cases, application woes meant that the business received money they weren't qualified for in the first place. For example, a company might have stated that it had employees when it really only had independent contractors. And while that might seem like a semantics to the layperson, that kind of difference could have major implications when it comes time to file business taxes. It's also important how the funds are used, and it's important to keep that in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So please keep clear and concise bookkeeping. Your signed PPP loan contract stated that you would produce monthly government-ready financials, and you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. So separate accounts to identify your PPP loan. For example, other income PPP loan non-taxable would be an example, but make sure they're separate accounts and not commingled with the rest of your business. It is important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. If you received a PPP loan, expect a tax audit. Now, in recent months, the SBA and the U.S. Treasury have announced that all PPP loans in excess of $2 million will be audited. Loans that are less than $2 million are subject to an audit, and much lower loans have been, and they will continue to be scrutinized. There's a lot of fraud out there, and they're very conscious of it. So there is a higher probability that the IRS will audit you. And there also the IRS has created a hotline for anonymous callers to report possible fraud. So how do you ensure a smooth audit process? Well, don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation. They should all be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And hire a CPA who can represent you and defend your business against IRS if necessary. Does my PPP, so here's some of the frequently asked questions. Does my PPP count as taxable income? No funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will always be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with those funds. Expenses that were not paid using PPP loans can still be written off as usual. And even if your PPP loan was not forgiven, Payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interests. PPP loan proceeds cannot be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Will PPP loans be audited by the IRS? According to the U.S. Treasury, all PPP loans that exceed $2 million will be audited. The IRS may also audit all other loans, so it's best to be prepared, even if you received a much smaller loan. So one of the things that's important to understand is there are some states that tax forgiven PPP loans. Is New Mexico one of them? Well, we're lucky. According to this graphic right here, New Mexico does not tax forgiven PPP loans. Now, please check with your CPA because these things do change, have changed, could change. But please ask that question of your CPA, are forgiven PPP loans taxed or not? Now let's go into EIDL. EIDL also has been impacted by the infrastructure bill. Now, it has not been impacted as badly as the rest. And this is interesting because EIDL still has, at this point, and this was November 1st, has $100 billion still available to distribute. And that includes grants and includes the actual loan funding. Now, they also, the Small Business Administration did have a webinar yesterday, and they did say that indeed they still have funds. They are still open for business until the end of the year. So if you are dragging your feet or thinking about it, I would get out there and apply immediately as soon as you can, because as I said, these things change, but right now EIDL is still funded. So we're lucky in that regard. So though the Small Business SBA disaster loans have been available for years, the EIDL was signed into law in March of 2020 as part of the CARES Act. So the funding that we're talking about is very specific to COVID-19. If you are a small business, a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that has suffered economic injury as a result of the COVID-19 pandemic, and who hasn't, you can apply for a COVID-19 EIDL. These loans do not go through a lender like the PPP does. They come directly from the Small Business Disaster Assistance or Small Business Administration's Disaster Assistance Program. It's no cost to apply. You can go to the disaster.sba.gov, and there's very simple instructions on how to apply for these. So what are some of the tax implications? Now, the EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. In other words, funds from EIDL are not reported as taxable business income on your tax return. But what about the grants? Because there are several grants out there. There's a targeted grant and a supplemental grant. So small businesses that have been impacted by COVID-19 might be eligible for a targeted EIDL advance or grant, and that's up to $10,000. As well, and in addition, is a supplemental targeted advance of $5,000. These grants do not have to be repaid. The SBA is encouraging all eligible businesses to apply, and right now we still have some money out there. The grant program was part of the initial CARES Act in 2020, but funds were exhausted within weeks. So in December, Congress allocated additional funds for the program and established more targeted eligibility criteria. So to be considered for one of these grants, your business must meet the eligibility requirements and apply or have applied for an EIDL loan. However, and this is important, however, you do not have to get or accept the loan to get the grant if you meet the eligibility requirements. So how do I qualify for the targeted grant? Well, you have to be located in a low-income community, and you have to have suffered an economic loss greater than 30%, and you need to employ not more than 300 employees. In addition, a business must qualify as an eligible entity as defined in the CARES Act, a small business cooperative, an ESOP, tribal concern with fewer than 500 employees, an individual who operates as a sole proprietorship with or without employees, or as an independent contractor, or a private, nonprofit, or small agricultural cooperative. But the business must have been in operation by January 20th, 2020, January 31st of 2020, and the business must be directly affected by COVID-19. So economic loss definition, what exactly does that mean? The amount by which the gross receipts of a covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, related to a comparable 8-week period immediately preceding March 2nd, 2020, or during 2019. Well, how do I demonstrate an economic loss? Well, getting your business tax documents organized and up to date will be essential to applying for this grant and demonstrating that you qualify. Well, what exactly is a low income area? The SBA has released an online tool. Again, you can get this at the SBA website, and it helps borrowers understand if they're located in a low income area. Noting and need to note that the business address must be located in the low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. Now that map is out there. Like I said, there is a link. All you have to do is type in your zip code, and it brings you right down to the street level, and it tells you quite clearly if you're in a low income area. So let's go on to the next one, which is the supplemental, as opposed to the targeted. So what are the new $5,000 supplemental grants? So in March of this year, the American Rescue Plan included $5 billion in funding for these supplemental targeted grants. And these are to help the hardest hit businesses. So how do I qualify? Well, if you suffered an economic loss of greater than 50%, and if you employ not more than 10 employees, you can qualify. Again, this supplemental grant is in addition to the $10,000. The SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental. So the SBA will reach out to you. Getting your business tax documents, again, organized and up to date will be essential for applying for this grant also and demonstrating that you qualify. So what are the tax implications? So initially, funds from idle advances were to be reported as taxable income, and this decision was reversed under the CCAA Act in December of last year. It does not need to be included in your taxable income when filing your taxes, and additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that idle grants are not taxable at the federal level. Again, they may be at the state level, but they're definitely not at the federal level. And that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with those funds, and that idle grants will not be deducted from the PPP for loan forgiveness purposes. So check with your tax advisor about tax implications at the state or local level. Will idle loans be audited? Well, yes. When you receive your idle loan, you agree to spend the funds provided for certain business expenses. As part of your loan agreement, you agree to maintain records and provide those records to the SBA to be audited if necessary. Now, while there's always a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit does occur. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. How do I qualify for a targeted EIDL grant? If you have previously applied for an EIDL loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied, you can do so at sba.gov, and if your business appears eligible, you will be invited to apply for the targeted advance. You do not have to accept the EIDL loan, as I said, or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you've not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan, and I think it's 3.75%, through December 31st of this year, as long as the funds are available. And if it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? No. EIDLs are loans and must be repaid over 30 years. Unlike PPP loans, there is no forgiveness process for these loans. Can I apply for a Paycheck Protection Program? Yes. Paycheck Protection Program, the PPP loans, may be fully forgiven if they are spent on certain expenses, primarily payroll, which essentially turns them into a grant. Now, again, the PPP loan program is closed for new applicants, but we're in the forgiveness portion of this program now. However, if your business received a PPP loan, you may still be eligible for an EIDL loan and/or grant. Businesses may apply for both PPP and EIDL if they qualify. And I also want to mention at this time, before I go into the ERTC, no, that's okay, you can go, that's fine, is that the EIDL loans, they did have a cap of $500,000. That cap now has been increased to $2 million, and they call it EIDL 2.0, and that happened about a couple of months ago. So there are a lot of funds out there. They've increased it from 500,000 cap to 2 million. In order to apply for the 2 million, though, you have to have some real estate in order to put it down as equity. So now let's talk about the ERTC. And again, we've had, this has been impacted by the infrastructure bill, and where previously this program was supposed to extend through the end of this year, the infrastructure bill has it ending the end of September. So I want you very much aware of that. So that you plan accordingly if you plan on using this program, because it right now, according to this for 2020 as well as 2021, if you haven't taken advantage of this program, it's a great program. And so I would highly recommend that you take advantage of it if you haven't already. So it's a tax credit first put in place last year as a temporary coronavirus relief provision, and it was in order to assist businesses in keeping their employees on the payroll. And since then, the ERC has been significantly expanded. And in the most recent relief bill in January, the ERC has been extended for all of 2021, except, well, until Monday of next week. So there are different rules between 2020 and 2021. In 2020, you had to have 100 or less qualified full-time equivalent, and that's 30 hours or more. And in 2021, they upped that to 500 or less, or 500 employees. In 2020, the tax credit was up to 50% of 10,000. And in 2021, that tax credit went up to 70% of 10,000. So substantial increases between the 2 years. Now, this credit is available to businesses with fewer than 500 in 2020 or 100 now, employees who are 100 now in 2021, 500 now, 100 in 2020, who either suspended or partially suspended their business due to COVID-19 because of a government order. And I put this in red because it's important. It's or you have to experience a 50% for 2020 or a 20% for 2021 decline in gross receipts when compared with the same quarter in the previous year. So of those two qualifications, it's not and, understand very clearly, it's or. So there were a series of New Mexico government health orders in 2020 and 2021, and each order was effective for different dates, for different businesses, and for details on who was impacted and the dates when the orders were effective. You can go to the newmexicohealth.org website under public health orders and executive orders, and you can see the progression of those orders. You can see where your business fits in, and that will give you the time that you might be able to qualify for suspended or partially suspended your business due to a COVID government order. So tax credits are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for dollar basis. And the tax credit is calculated per employee and is a 70% or 50%, depending upon the year, of up to $10,000 in qualified wages paid per quarter. Qualified wages include the portion of your employee's earnings that you reported on your IRS Form 941. Is this credit taxable? Well, in a way it is. In a way it's not. The ERC credit is subject to income tax, but it lowers your taxable rate. Wages on the claim credit must be reduced by the amount of the credit, which results in the credit being taxable income. Reduction in wages may also impact Section 199A, eligible wages for purposes of the 20% qualified business income deduction. If the credit is claimed on 2020 payroll taxes after the tax return has been filed, an amended income tax return may be required to accurately exclude wages reduced for the ERC. But most important on this slide is there is no double dipping between the PPP and the ERTC programs. So let me give you an example of what I mean by that. Now, I've created a theoretical company here, came strictly out of my head, and I'm going to call it Star Technical Support. It's a small business in Roswell, New Mexico. This is an example from quarter 2 of 2020. So when comparing quarter 2 of 2020 to quarter 2 of 2019, Star experienced a 55% decrease in gross receipts. And in order to qualify in 2020, a greater than 50% increase must be met, and therefore the business qualifies for the 2020 ERTC. In quarter 2, Star also, in 2020, Star also received $12,000 of PPP. Do you still have me on?
You're good on my end.
I'm good on your end. For some reason, my computer went haywire on me. Let's see if I can get back to the presentation. There we go. Sorry about that, guys. This is real life. Life as I know it. Life as my day has been today. So bear with me. So the Star Technical Support has 5 employees, and each FTE employee is paid $8,000 per quarter, and that includes their health insurance benefits that the company is paying. In quarter 2, 2020, Star paid their employees $40,000. That's 5 employees times their $8,000, and that's the $40,000. And the ERTC during 2020 was 50% of the qualified wages. So for quarter 2, they had an ERTC of $20,000, but because they also received PPP, they ended up with a total of $8,000. You have to subtract the PPP, and still they got a credit, but it went from $20,000 to $8,000. The next example I'm going to give you is an example out of quarter 1 of 2020, and again, this is a theoretical company. And it's called Fred's Fantastic Car Wash, and they're located in Los Lunas. And when they compared Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. And in order to qualify in 2021, a greater than 20% decrease needs to be met. And therefore, they did qualify for the ERTC. Now, they have 10 employees, and each employee is paid $7,000 per quarter. And again, that includes health insurance benefits. In Q1 of 2021, Fred paid their employees $70,000. So that's the 10 employees times the 7,000. So because of the ERTC in 2021 is at 70%, they qualified for a $49,000 quarter ERTC credit. That has an annual estimated credit of 2021 of $196,000. Now, because of this recent sweeping of funds, that would lower that 196 by 49,000. But I think you get the idea of how beneficial this credit can be to a small business. So this shows you the difference between 2020 and 2021. In 2020, you had to have less than 100 employees. In 2021, they raised that to 500. The gross receipt decrease was 50%, and they brought that to 20%, much more beneficial. And the wage credit per employee was at 50%, and they increased it to 70. So 2021 was a very good year as far as the ERTC program is concerned. So how do you file? If your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. There are some exclusions. You cannot use the owner's pay or the owner's relatives' pay when calculating wages. And there is some discussion and some mixed messages out there. So again, work with your CPA on this particular exclusion, because there's a lot of interpretations. File to apply this credit using your standard quarterly form, your 941. If you want to file in advance, there's a special form for that. And that's the Form 7200 advance payment of employee credit due to COVID-19. And if you haven't taken advantage of the ERTC in either 2020 or 2021, there is a form where you can file retroactively, and that's Form 941-X, which is Adjusted Employer's Quarterly Tax Return. And how long do I have to file for the tax credit? Well, a ladder of 3 years after the original filing or 2 years after paying the tax. So please get professional guidance and support when filing it. There are a lot of nuances in filing for the ERTC. So usually the best people to go to are your payroll experts, and they're preferably a professional who is well informed on the current interpretations and laws. While the ERC is certainly a taxpayer-friendly relief provision, the IRS is just not giving dollars away. So looking at taxpayer submissions, both on the front end and then auditing them down the road. So the best practice, as with all of these programs, is to provide contemporaneous documentation now when first determining whether they qualify. So to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for ERC, and please don't miss out on this terrific tax incentive. Again, even though it's going away, you still have an opportunity to retroactively file if you haven't. So here are some frequently asked questions. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. This was originally true, but Congress in December of last year, they removed the limitation on only claiming one or the other, and PPP will only account for 2.5 times your monthly payroll expenses, and it's meant to be spread over 6 months. So that leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more, And again, the CAA, which was passed in December, has changed the qualifications so that a reduction of 20% now qualifies. But remember, there is also another way to qualify for ERC if your business has been subject to a partial or full suspension due to a government order. You can qualify for ERTC. My business was not shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local, of your business could potentially qualify. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain, and we all know we're suffering with that right now, or vendors, reduction in services that were offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially could qualify you for this ERC. Key considerations are, due to the government ordered partial or full suspension your business was not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on your business operations? Remember, the partial or full suspension is an alternative way to qualify for the ERC, separate from the reduction in gross receipts test. My company was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business can still qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, it's great news that you grew. But if your company has grown during quarantine but experienced a full or partial suspension, there are expenses that may still qualify. Well, I had sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CCCAA that was signed in last December, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. This is a refundable credit. In practice, this means that any credit overage above tax liability is sent to the taxpayer or business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. Now, the employee account restriction is based on full-time equivalent employees, which is a more involved calculation than just counting everyone in the office. So if you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for these employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for the ERC. A few facts. Failure to document, the tax man cometh. The ERC is a refundable tax credit. It provides robust benefits. If you had to draw up a tax provision that makes the IRS lie awake at night, well, this would be one. There are a lot of nuances in filing for this credit. Make sure you work with a payroll professional to make sure you get the full credit that you are eligible for. So let's recap. What is the process? In conclusion, Congress votes, they enact laws, and they provide government funding, or they take it away, as the case may be. IRS, the SBA, the state and local governments, they interpret the law and the tax implications. There are new forms that are created and reporting requirements. CPAs follow interpretations and provide guidance to the taxpayers. What is the result? Well, a lot of confusion and a lot of restating and a lot of clarification and a lot of misinformation. One of these examples is the deadline for last year for tax filing moved out to May 17th for a variety of reasons. And that was because there was so much confusion out there. There was a second round of PPP. There were changes to the employee retention credit. There was continued stay-at-home orders, making it difficult to access taxpayer data. And the IRS was short of staff due to the COVID-19 pandemic. So that's part of the confusion that's been out there. So in conclusion, your 2020 and 2021 taxes are going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So record keeping is important. Keep accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and prioritize and categorize all of your business expenses on both your balance sheet and your P&L. Receipts and invoices should be digitally filed and recorded, and take the time. It's well worth the effort to be able to see where your money is going and ensure that you'll be able to get the most of your eligible deductions come tax season. Please keep in mind, again, this information is changing rapidly and is based on current understanding of the various programs. Although we'll be monitoring and updating the information as it becomes available, please don't rely solely on this presentation for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. But make sure that whomever you consult with, that they are up to date on the most recent guidance from the SBA, the IRS, or the US Treasury. We've now come to the portion of our program where we answer any questions and Q&A. Do we have anything out there? Are there any questions?
Let me check and see.
Okay.
I do not see anything in the Q&A. Don't be shy to ask us any questions should you have them. We can just take a quick moment here. Just be sure to remember that the NMSBDC is here to help you during any stage of your business, so don't hesitate to reach out to us, and I will follow up with an email with more information. And then Peggy, I'm still not seeing anything in the Q&A. Is there anything in specific you wanted to say to wrap things up?
No, I think we've come to a good point to close the program.
Excellent. Thank you so much for the valuable information and all the recent updates. Just always such a pleasure to have you, Peggy. And thank you so much for your attendance. Have a wonderful afternoon and evening, and we hope to see you again soon.
Thank you.
All right, I'm going to stop the recording.